Good morning, everyone. Today we are going to study and understand the first chapter of cost accounting, which is nature and scope of cost accounting. In this chapter, we are going to learn about definition of cost accounting, why the concept of cost accounting is born, scope of cost accounting, objectives of cost accounting, principles of cost accounting, importance and limitation of cost accounting, procedure for installation costing system, characteristics of an ideal costing system, methods and techniques of costing. So, the first one is the definition of cost accounting. Cost accounting is a process of assigning costs to cost objects that typically include a company's products, services, and any other activities that involve the company. So, basically, cost accounting means it is a process in which the company's products and services are ascertained. Their costs are ascertained in the process of cost accounting. So the next one is why the concept of cost accounting is born. Concept of cost accounting is born due to the limitation of financial accounting. Following are the points. The first one is financial accounting considers only quantifiable information. Financial accounting only records the information regarding quantity and not quality, whereas cost accounting records both quantity and quality information. The second one is no classification is done in financial accounting. Suppose there is a loss in a company. Can financial accounting say about which factor has made the loss of that company? No, right? But cost accounting can say which factor had made loss in that particular company or association. The third one is possibility of manipulation of financial accounts. So there are highly chances that the information of financial accounts can be manipulated. The fourth one is financial accounting fails to provide information needs to different levels of management. Financial accounting is not able to provide the information which is needed to different levels of management. The fifth one is fails to provide adequate info of price fixed. So here the meaning of adequate is to provide sufficient for a specific need or requirement. Fails to provide adequate information of price fixation. Financial accounting does not provide adequate or satisfactory information for the price fixation, whereas cost accounting does. The sixth one is does not provide a basis for cost comparison. In financial accounting, we can compare the profit of same organization, but can we compare the cost? No, right? Then comes 7. Reveals only overall result of the business. This line is connected to point number 2. It is said that it reveals only overall result of the business, which means it only reveals the profit or loss of a business, but doesn't reveal why the profit or loss has been made. The eighth one is provides only historical record. So financial accounting only records the historical data and not the present or future one, whereas the cost accounting does record all the three: present, future and historical data. Then comes the ninth one, absence of full disclosure of facts. This means that the full disclosure principle states that all relevant and necessary information for the understanding of a company's financial is not provided in financial accounting. Then comes the 10th one, incomplete knowledge of cost. Financial accounting does not records information of costs, so it has the incomplete knowledge of cost. Then comes the 11th one, does not make use of cost control techniques. Financial accounting does not use the cost control techniques. Then the next one, does not provide basis for cost comparison. So the financial accounting does not provide basis for the cost comparison. The next one is fails to supply data to the management. This means that financial accounting only records quantifiable information, whereas management needs both quantifiable and qualifiable information. That's why financial accounting fails to supply data to the management. And the last one is fails to help in cost reduction. Financial accounting only reveals the profit or loss of a business and does not help in the reduction of a cost of a particular organization or a product or service. Then comes scope of cost accounting. The first one is cost ascertainment. It ascertains cost in aggregate and cost per unit by collecting, classifying, and analyzing costs at different stages of production by using various methods and techniques. The second one is cost accounting. It is the process of accounting for costs which begins with the incurrence of costs and ends with the control of costs. It maintains proper account of cost by linking them with cost centers. The third one is cost reduction. Cost reduction is the achievement of real and permanent reduction in the unit cost of goods produced or services rendered without sacrificing quality. The fourth one is cost control. Cost control involves the setting of standard performance, measuring actual performance, comparing actual performance against standard performance, and taking corrective action in case of negative variance. Then the next one is cost reporting. So it is the timely presentation of cost information before management in a very comprehensive way for decision making. Reporting of cost made along with visual aids like charts, diagrams, table, etc. to make it more effective. And the last one is cost audit. It is the application of auditing principles and procedures in the field cost accounting. It involves verification of cost accounting records and examining these records to ensure that they adhere to the cost accounting principles, plans, procedures, and objectives. The overall objectives of cost audit is to protect the interest of consumers, shareholders, and the society at large. Then the next one is objectives of cost accounting. Objective also means purpose. So we can also say it as purpose of cost accounting. The first objective or purpose of cost accounting is undertaking cost studies and investigation to assist in decision making. It means it undertakes special cost studies and investigation to help management in decision making such as make or buy decision, drop or continue decision, future expansion policies, pricing of product, etc. The second one is preparation of budget and standard cost. It provides data to the management for the preparation of budgets and standard cost, and analysis of variances between budgeted figures and actual or standard and actual through light on the weak areas of business operations and guides the management in taking corrective action to remove the unfavorable cost variances. The third one is ascertainment of profit. We all know the meaning of ascertainment. Cost accounting helps in tracking and ascertaining profitability of the product by preparing profit and loss account and balance sheet periodically. The determination of profitability of each product, process, department, etc. is the important object of costing. Then the fourth one is formulating policies. Cost accounting plays important role to formulate policies of the organization. It provides necessary information and data to the top level management which are essential for framing marketing policies of the company. The fifth one is basis of preparing financial statements. Cost accounting is the foundation for the preparation of different financial statements. The examples are profit and loss account, balance sheet, trial balance, etc. of the company.